Take a look at the markets this morning. Joining us right now is Mona Mahajan. She's the Edward Jones' senior investment strategist. Good morning to you. We've been just batting around some ideas about who may be the next Treasury Secretary. We've been batting around Bitcoin. We've been batting around a lot of green, a little bit less green this morning, Mona. But we've also been batting around what the Fed may have to do, or what's going on with the 10-year at least. Where do you stand this morning?
Yeah, look, it's been a really nice post-election rally for the markets. I think the S&P is up 3.5% in this kind of week alone. And it's really been driven by a broadening of market leadership theme that we've seen begin in the third quarter of this year and really get extended post-election as well. So you see areas like small caps and mid caps playing some catch up. You're seeing areas like cyclical parts of the market, financials, industrials, energy, play some catch up alongside your kind of tech and AI trades. And of course, in the bond market, we're seeing a little bit of pressure on bonds given, while we have pro-growth policies potentially on one side, we have potentially some higher inflation and parts of the market that may induce deficits going forward. So we'd say this broadening of market leadership theme has legs, but be mindful of that inflation that may start to creep up in the months ahead.
Given, though, how much the market has already just moved, even in the past week, as you just described, and when you look at the rest of the year and everything else, do you say to yourself, there's a lot more room to run? Do you say there's going to be a pullback? Where are you?
Yeah, it's a great question. Look, we've had two very strong back-to-back years in the S&P 500, 24% last year. We're up over 25% this year. Are we going to get a third straight year of 20% plus returns? We do think that pace of gains can moderate from here. And in fact, the volatility has been very light this year as well. We know that average of 2 to 3, kind of 5, 10% plus corrections hasn't played out. So perhaps as we get through this period of, what are policies going to do going forward, there will be some uncertainty in the market that takes hold. But that, we think, is still the opportunity. Keep in mind, the average bull market does last about 4 years. It's up over 100%. We're at kind of year 3 of the bull market, and we're up about 60% plus. And so could we have some legs from here? Absolutely. But we're really watching the fundamental story. What is the economy doing? What are earnings doing? And is the Fed continuing to move in the right direction? And we think the answer thus far is yes, and supportive of the ongoing
What's your base
expansion.
case for going forward? There's a fascinating piece. I don't know. We didn't even talk about it yesterday. It was the piece in the Journal about Warren Buffett. I don't know if you saw it. That effectively was talking about him building an ark, practically, a $300 billion arc, and whether he knew something that somehow we don't know, given that he seems to be at least slowly or maybe fast getting out of the market and what that's about, but also was referencing just so many of the other big financial houses and what their long-term, like over the next 10-year base cases on an annual basis, and they're 3%, 5%, not 20%.
Yeah, absolutely. Look, I think the 3% figure had a range around it of 0 to 7%. It's hard to do a 10-year kind of look forward here, but we do think, as we said, that pace of gains may moderate going forward. We're looking at economic growth of 2.5% here in the U.S. We are looking at inflation that hopefully cooperates and continues to cooperate at 2.5%, but that does lead itself to nominal growth of closer to 5% or so. And when you think about it, we've had a great deal of valuation expansion already. So earnings growth really may be the driver of returns. And next year we are looking at an earnings growth profile probably somewhere in the 8 to 10% range. There are upside, to that figures, but if you purely base it on that, we're still looking at a decent S&P 500 return next year. And so I think you have to think about what areas can benefit from valuation expansion, and probably not as much the mega cap tech and AI parts of the market, but look at the other parts of the market that may also benefit from the valuation expansion in addition to the earnings growth story. And so that's really how we're positioning for the year ahead.
Okay, final question. Would you buy Bitcoin at $86,000?
Yeah, look, we think there are great opportunities in the market, even outside of Bitcoin. When you think about moving some of that cash-like instruments into equities and in bond markets, we still think, Bitcoin remains a little speculative here. We continue to like fundamentals in equities and bonds that can really provide that long-term growth profile for investors as well. Compound interest, we know, is that eighth wonder of the world. If you stick to your long-term plan, that really is what works over time as well.
You should have stopped it. Yeah, that's how you started answering. You started answering by going, yeah, and I thought you were just going to say, yeah.
Sure.
And if you can buy it at 86,000, you're getting a deal because it's at about 87.5 right now. So you would buy it at 86 right now when you could sell it immediately, right? Arbitrage it.
Well,
I don't move that fast.
Yeah.
Yeah.
Slowpoke. I'm a slowpoke.